Securities Private Limited. Now, today we'll be talking about decoding budget for investors. Now, Finance Minister Nirmala Sitharaman has hit the bullseye by presenting a Bahubali kind of budget. At least that's what some of the experts are naming. Now, the government prioritized infrastructure development and gave much needed relief to the middle class as well. Now, massive capital outlays in agriculture, green energy, and railways will definitely support growth to push India into the top growth economy among developed markets as well. Now, in a nutshell, the Union Budget 23 is a fiscally responsible, inclusive, and pro growth, and it does provide a clear roadmap for fiscal consolidation. Now, to discuss more on budget and its impact on stocks and sectors, we have Kranti with us to take the conversation forward. Welcome to the show, Kranti.
Thanks, Shitish. Thanks for inviting me on your show.
Thank you so much for being part of the show, Kranti. Now, let me start off. What are your views on the full budget presented by Nirmala Sitharaman today?
Shitish, if we analyze the blueprint of the budget, it's a very constructive budget with a vision towards the future of India. And also, the beauty of this budget is finance minister taken a lot of effort to cover all the parts of the pyramid of the society. It can be the bottom of the pyramid, middle of the pyramid, and also the top of the pyramid. And what happens is most of the budget, the previous budgets, invariably the finance ministers can't take every part of the pyramid into consideration. This is one of the few budgets which I can come across, which can lay a foundation for every person in the society have something is there in this budget. That's what the beauty of this budget, and we can see the effort of the finance ministry and the finance minister taken to present a very constructive budget for India.
Right, a constructive budget from coming from the government, so definitely a positive sign. Now, let me move on to my next question, and before I move on, let me also give out a clear message to our viewers. Whoever is watching the show right now, who is watching the stream right now, if you have any questions regarding the budget or its impact on any sectors, do let us know. We'll try and take that question up with Country right here on ET Markets live stream. And if you've just logged in, just hit the like button on the stream and follow Kanti for more exciting, shows that we keep on having with him. Now, before move on, definitely it's a constructive budget. And do you think that government was able to, let's say, walk the talk and keep the growth agenda in mind?
Absolutely, the kind of budget they presented. This budget is definitely a constructive budget, as I told you, and the government seems to be delivering what they're discussing and what they're promising. And this is one of the budget that lay down the roadmap for what they promise and what they deliver. So there are no negative surprises from this budget. That's what the important thing. What a capital market or a normal investor expect from a budget. But this budget is there are no negatives. The positives are there. Many positives are there. That's where the market has welcomed the budget in the middle of the day. But various reasons, the end of the day, the market closed in a flattish note. That's the response of the market. But overall, there are no negatives in this budget, and the government is laying down the foundation and giving a roadmap for the future India. That's what I conceive from this budget document is concerned.
Absolutely, and you said flattish closing for the market. Sensex is up around about 150 odd points, while Nifty is down 45 points. I haven't seen this kind of gap between Sensex and Nifty for quite some time now. But yes, it is indeed surprising for me as well, the kind of closing that we have seen for the markets. Now, we have a couple of comments coming in from Devanika. Now, Devanika Ghosh, waves. Says hello, sir, and definitely, Devanika, will come to the stocks which you can buy post budget. But is there any any other query that you have apart from stocks? Is there any announcement that was being made, and you want to get more clarity on that announcement? We'll definitely try and take that up right here on this edition with Kranti on ET Markets live stream. Hi, Sahil. Great to have you on this show as well. In case you have any query, do let us know. We'll definitely take that up with Kranti right here, right now, especially on stock sector, especially on the announcement that are being made either from taxation front or either from any other, from the capital expenditure outlay that's being made, so on and so forth. We'll try and take that up with Kranti right here, right now. Apart from that, let me move on to my next question, Kranti. Now, post-budget, what is the kind of impact you see on the markets? Now, in the initial period of time, we see some bit of nervousness, especially in the month of January. It could be because of global cues as well, and definitely, in the run-up to the budget, especially in the last week, we've seen an Adani announcement coming in, and that's what made the markets a little bit more nervous around the event. But good part is that there was no tinkering made for the LTCG part, or at least from a capital gains point of view. Now that the event is over, yes, we have US Fed policy meet. The outcome of the US Fed policy meet later in the day. But what is the long-term trend that you foresee for the markets, keeping the government intention in mind?
Shitish, technically speaking, the markets are in a consolidation phase right now. This year, if I have to analyze the market, last 7-8 months, whenever the Nifty came down below 18,000, it tried to came below at 17,500 range, and market is finding a stiff headwinds and a resistance at 18,300 level. So market is in a complete range bound right now. And what we witnessed is India is one of the outperforming market in 2022. And right now, market is also trying to spend some kind of time. Okay, it's correcting time wise also. That's what we can expect from this budget. And we have a couple of events, and all of a sudden, foreign portfolio investor turned as net sellers because of various reasons, like they're getting long on China, exiting emerging markets, especially trimming some of their positions in India. That's creating extra pressure on Indian market. But thank God, Indian domestic institutional investors are quite active in the market. They're trying to absorb the selling that's throwing from the FIs are concerned. And also, right now, we have emerged a new army of investors that are retail is very strong. They are also absorbing some kind of selling driven by the foreign portfolio investors are concerned. So markets are in a consolidation phase right now, and we are quite sanguine about the India's fundamentals and the company profitabilities are concerned going ahead. So we would be spending some kind of consolidation phase right now. Once these kind of the Federal Reserve and also the Indian monetary policies, once we get a clear direction, markets can head it towards a much higher side in the days ahead.
Right. So a consolidation phase is something that that you foresee at least in the short to medium term for the markets. Now, before I move on to the questions, let me also take one question from Himaya. Now, Himaya wants to understand. Is the decline in banking stocks, especially the PSU banking stock, we saw some bit of rub-off effect on the PSU banking back in today's session as well. So he wants to ask, is the decline in banks short-term or Adani exposure will bring more trouble for the banking space? I think especially for the PSU banking space.
Shitish, the Adani event, we need to see how the things will evolve over a period of time. It's completely premature to say how the things will evolve over a period of time. Today, the afternoon, the news that came from Credit Suisse invalidating their bonds and not accepting the Adani bonds as a collateral. These are the kind of news that's creating extra pressure on the bank index right now. Of course, State Bank of India do have some kind of exposure towards Adani Enterprises, but it's a very limited exposure they have, and what we witnessed is the banking and financial services, especially public sector banks, have been outperformance in the recent past. That's the reason one kind of profit booking that is taking place right now because of this uncertainty and overhang of Adani right now. So nothing
Right.
to worry with respect to Indian banking sector is concerned. We're at a
Mm,
strong note. The worst is over for both the private as well as the public sector banking space is concerned. So any dip, any decline, any panic situation that
mm,
creates, rather I perceive it as a very good opportunity for the longer term investors to chip in
right.
these kind of large cap banking stocks are concerned.
Right. I hope, Ramamurthy, you got your answer there. In case you have any further query, do let us know, and we'll try and take that up with Kranti on this live stream. Now, apart from that, Kranti, any which are the sectors that are likely to benefit the most? If you look at the positives, there are a lot of positives in the budget, and yes, there are negatives as well. We'll definitely come to the negatives, later in the session. But from a sectoral point of view, which sectors are likely to benefit the most from this budget?
As the roadmap has laid down for 10 lakhs crores capex, which is a upfront, looks like a big
Hmm.
sum for the Indian economy is concerned. And the banking and infrastructure, and also the capital goods and engineering, these are the primary sectors that are going to take the benefit from the budget. So
Right.
one can think about the larger cap stocks in this space, and probably they can use these kind of panic or consolidation situations in the market
Hmm.
probably to accumulate in their portfolio from these sectors. And also, Shitish, I would like to add one more sector
Hmm.
for our conversation. Defense has been emerging as one of the new age sector in India
Okay.
because of the Atmanirbhar Bharat initiative. Many of the
Right.
Indian companies are getting a lot of defense contracts. That's the reason.
Hmm.
If you see the stocks like these are the not the recommendation, just for the observation. I'm just sharing with the public. Okay.
Yeah.
So stocks like Hindustan Aeronautics, Mazgan Dockyard, Garden Reach. So many of these defense exposure stocks like Cochin Shipyard, these are the
Right.
stocks have been outperformers and they have been given more than 100% returns in last 1.5 year. So,
Okay.
so this is a new age stocks, and the defense sector is emerging in India. So one can have a closer watch on this sector also going ahead.
Hmm. Hmm. We got something for railway stocks as well in this budget, Kanti. So, do you think that rally is sort of done with in railway stocks, or they could be considered for the long term?
Already, we witnessed a very good amount of rally in majority of the railway stocks. So we
Yes.
need to
Yes.
see it should be more of both a stock specific proposition is concerned. We need to see the management quality and what
Hmm.
kind of delivery of the order book. We need to chip in and do a further drill down with respect to railway centric stocks are concerned, Shitish.
Right. Now, let me also come to another point. Well, do you think the budget 23 had something for the common man? Yes, we saw some bit of tweak in the personal taxation front. So, your views on that? Will it cheer the common public?
Yeah, definitely. This is much waited, and a common man has been, especially the middle class, has been waiting for some kind of tax reliefs or tax stops from the finance minister. And the finance minister, that's what in the beginning you said, Bahubali, and it's like a bullseye. So the main target where she could able to cheer up the middle class in India is by just giving some kind of increasing the tax slab or the entry level at 7 lakhs. Below 7 lakhs is a completely tax free,
Right.
which is with the respect of the rise in the per capita incomes of Indians are concerned, and also rising the disposable incomes of Indians are concerned, which
Hmm.
is a good measure, a welcoming measure from the finance minister from this budget.
Right. So, and how will the budget 23 impact the investor community, let's say the retail or the mutual fund investors?
One thing, Shitish, there were some kind of expectation or rumors ahead of the budget.
Hmm.
Finance minister
Hmm.
is going to touch base or tweak the long-term capital gain or increase the tenure of the long-term capital gain, or they might
Yeah.
revise the long-term capital gain. The percentage is concerned or taxation is concerned.
Hmm.
So
Hmm.
she have not touched any kind of these kind of tweaking. and so as a status quo she is maintaining, which is a good measure for as of now for the stock markets are concerned, because whenever these kind of long-term capital gain or short-term capital gain with respect to stock markets are concerned tweaked, there is a negative reaction erupting
Right.
in the markets. That's what we have
Absolutely.
witnessed. So for a common investors, Indian markets with respect to the capital gains are concerned, both it can be short term or the long term. We are
Mm,
it's quite favorable for both retail as well as an investor in direct equity and
yeah.
also a investor in mutual fund.
Mm,
They can continue their investing in either direct way of equities or through mutual funds. They can continue their systematic investment plans.
right. But do you think that taxation on insurance stocks is something which was uncalled for, that could have some bit of negative sentiment?
Shitish, it's not for a common man. Okay, a person who is subscribing for a 5 lakhs above insurance premium, definitely targeting a above the middle class, and they can afford over a period of time. So some kind of negativity is their initial reaction. But how
Yeah.
many policies, IRDA measures, or every insurance company receives that high ticket size of above 5 lakhs?
Mm,
We need to
mm,
measure, but what kind of impact that will have on the insurance sales, we need to see. But by and large, for a common man, okay, everybody thinks about the meeting the section 80C. That's what the saving limit everybody think.
right.
Above 5 lakhs insurance contribution, premium contribution, definitely the person who have a more disposable income, uh,
Right. Right.
that is the criteria. But I don't think so it's going to have a major impact. Earlier we are not aware about the long-term capital gain. Now we are paying 10% long-term capital gain on our equity
Yes.
investments. So people get habituated to this regime also over a period of time.
No, no, I'm sure, but the good part is that any insurance policy which will be issued from 1st April 23. So I guess, yeah, from the April month onward. So that is something which investors
Yeah,
have to sort of take
keep
care
in
of. But
mind.
yes, yeah, keep in mind, and we have someone wants to take a high ticket policy. 5 lakh and above. I think this is the time that someone can really invest and then
Yeah,
probably get
insurance
away with it.
companies use this measure as a good selling point right now.
Yes, absolutely. And post that, it'll get taxed. It'll get taxed. Apart from that, I think the death benefit stays, so that is still, that is still positive for anyone. Apart from that, now, Kanti, let me also move on to the stocks, which you think are likely to benefit the most from the budget. Although from a negative point of view, we saw some bit of rub-off effect on the ITC, and definitely in every budget, we see some kind of reaction on ITC, and starts with negative, and then towards the close of the day we saw some bit of positive on ITC as well. But what stocks which that are likely to benefit the most? Your views on?
One thing is the capex exposure. The capital goods are going to take a main advantage from this budget, Shitish. We
Okay.
can see stocks like L&T, Reliance Industries, and also there is a lot of emphasis towards the companies which are into green hydrogen. So these are the companies one can keep on their radar. But one can look for the larger cap space for the benefit of everyone. If there is any dip the market offers in these names like stock like Siemens India and Cummins, these stocks are rallied a lot. Cummins India, if you see, the stock has rallied a lot, but it's sustaining those levels. Any dip that offers in these kind of names, definitely investors can chip into their portfolio.
Right. Well, Debanika, I hope you got your answer, because she was looking for the stocks which she can look at probably post the event. So I hope, Debanika, you got your answer. Apart from that, Swaminathan also wanted to understand which is a good stock to bet on in pharma space. Will Sun Pharma or Lupin make sense at this point in time?
Yeah, but coming to pharma as a sector, Shitish, this was an outperforming sector 24 months back when the COVID wave was peak, and all the pharma sector stocks have given a beautiful multiplier return. Right now,
Mm,
pharma sector is in a consolidation phase right now, so one need to limit their expectation, or the return expectation should be limited in pharma sector, and one can the surface is changing right now. with respect to the
Right.
pharma sector is concerned. There are US FDA inspection that has arisen, and there are a lot of regulatory issues the pharma industry is currently facing right now. So one need to keep under consideration these points before entering into any pharma stock. But I stick to the large cap stocks with a investor who have a very less risk appetite
Mm,
and expect a
mm,
moderate returns. They can probably look like stocks like Sun Pharma or a Cipla kind of thing.
mm,
And those who have a high risk appetite want to be a part of a pharma story. Divis
mm.
Labs can be considered as a pharma stock going ahead for the investment.
Right. Now, one more thing, and adding to this question only, we've seen you also emphasized more on the large cap space, but given the fact that the government is putting so much in the infra basket, how will the small and the mid cap space will play out in 23? We saw underperformance in 2022, but given the outlay that the government is planning to do, and whenever we have seen that whenever the economy does well, and most of the recommendations which has come from the finance minister will support the economy, how will this space or the broader market space will play out in 23?
Shitish, as of course you rightly said, there is a complete lull in mid and small cap space right now. While coming to infrastructure is concerned, okay, when you have to choose the stocks from mid and small cap space, we need to be very specific. What is the offering they are doing? What kind of line of business model they are offering? It should be, it can be multiplier. Right now, if you see when we call about the capex is concerned, it can be a stock which is into you can say water treatment also can be considered. So there are
Mm,
certain specific stocks which are into this space. So mid and small cap stocks, their business models are not that much vibrant. They are mean to for a specific need of the industry. For example, if they say road, in
mm,
roads, what kind of business model they are having. So it is
mm,
more about a stock specific action. We cannot in a consolidated way, we cannot choose a single stock. We need to get into
mm.
the more about the microscopic view or
Right.
micro view right now with respect to
Mm,
the mid and small caps are concerned. But large cap space is concerned, they will be taking the advantage of all the movements in this entire capex cycle.
mm.
So that's the reason I shared a couple of large cap names.
No, no, absolutely, absolutely. Now, you know, if we look at some of the investors, now we have a tendency, now we include, means I also included, or at least, some of the people who track markets closely, or whenever they want to make a big investment. So what they do is they wait for the event to get over, and then probably, if we want to, put in, let's say, 5 lakh, 10 lakh. Now that picture is more clear where the government is headed, or what exactly is the outlay which the government is planning to do. So coming from that perspective, or coming from those investors, or people who hold on to the decision of making investment, what do you recommend if, let's say, someone plans to spend, let's say, 10 lakh odd rupees post budget, and especially for the long term, age bracket could be 30 to 40 years. What would you recommend how the asset allocation should look like?
If I have to allocate 100% right now, the mood of the market right now is the fixed income space also looking very attractive. So
Okay.
if I have to continue with the 100% equity, one need to have a staggered manner approach right now, and
Mm,
one need to if they are doing 100%, if they want to move 100% of their funds into equity market right now, I suggest them just move their money in a very staggered manner and use
okay.
every dip on the market to enter into the market, especially give more importance towards the banking and financial services, because of course we witnessed a very good rally in banking and financial services, but
Mm,
India has to go through, if we our GDP has to get doubled, and if we see the greater picture of India going ahead, banking and
mm,
financial services stocks are going to play a very pivotal role in terms of the economic development of India is concerned. So I call them as a linchpin to the economy. So
mm,
we cannot see India growing without banking and financial services. So
Yes, yes.
have a very good exposure towards banking and financial services. We have witnessed on a longer term basis also good consolidation in banking and financial services. So,
Mm,
and also people have been ignoring the IT right now. So the
mm,
kind of fears of US recession, all these measures have been surfacing. Of course, IT has been one of the best performing sector 18 months back. Now the
yeah.
stock in IT, they consolidated and they corrected more than 20 to 30% from their peaks. So one
Mm,
can chip in the large cap IT stocks also in their portfolio because Shitish, even though there is a medium to short term looks cloudy, but if you
mm,
see
mm,
the 20 years or 10 years span, IT has been one of the best performing for a investor. So one can
mm,
chip in IT into their portfolio. And right now, the large cap space like the companies which are into capital goods space also can be the part of their portfolio. So right now, I will be allocating more about the large cap space right now, and
okay.
one can give 20 to 30% in their portfolio weightage of
Mm,
mid and small cap also over a period of time. So right now it's a very tactical approach to construct a portfolio. For I'm talking
mm,
about for a fresh investor who is just
right.
entering into the market right now. So use the measure of staggered manner. Just try to understand the market, because why I'm telling the large cap space in my portfolio. Of course, I do like the
Mm,
value
mm.
investing and growth investing
No, no.
by nature. Since
Yeah,
it is a kind of situation, many of the new entrants are coming into the market. We
yeah,
They can't go and jump and buy a small cap stock or a mid cap stock right now. Stick to the game for the large cap until unless uh,
mm,
you are in a position to understand the market.
absolutely. We have one query coming in from Sahil now. He wants to understand what is your view on LIC. Definitely, we saw some bit of rub-off effect on some of the insurance names today, HDFC, SBI, among a few. So, and yes, LIC could also be under pressure because of the Adani saga, which is going on at this point in time. So, probably two, three negative headwinds for the company. So, what would you advise for someone who wants to invest in LIC right now?
In a staggered manner, coming to the fundamentals of Adani, we also LIC. Sorry, coming to the fundamentals of LIC, we cannot question. It's one of the strong organization in India.
Mm, mm,
So, but post listing, the stock has been languishing, and it's not
mm.
delivered as expected
Yeah.
returns. So there are some kind of overhangs on LIC is concerned, because post listing, the foreign portfolio investors have been waiting to see these kind of bigger issues that are coming from India. But
Mm,
LIC has been in a complete downtrend from the time of listing. It's not given expected returns. But if the investor is for a longer term, definitely
yeah.
in a staggered manner, he can accumulate LIC into his portfolio. There will be times,
Mm,
the times will come, LIC will be outperforming once the dust gets settled throughout the globe.
right. So, will LIC do the ITC? That is what something, because we've seen a lot of memes on ITC. When will ITC outperform? So, I think a similar kind of expectation for LIC as well now.
Yeah, Shitish, you rightly said, because the size of these paper, the market capitalization of these
Yeah.
companies is pretty. It's not easy to make an elephant to dance. Okay, so these are the sizes of the issues. So one thing is, they either LIC need to deliver extremely well in terms of their
Mm,
earning track record is concerned. Of course, LIC probably will do over a period of time, and
mm,
with a very good dividend yield, and for a conservative investor, one can
right.
chip in definitely LIC into their portfolio.
Right. Sahil, I'm sure you got your query answered. In case you have any further query, do let us know. We'll try and take that up with Kranti right here on ET Markets live stream. Apart from that, let me also move on to my next question. So, how do you rate budget on a scale of 1 to 5, and 5 being the best?
Sitish, if I have to analyze the budgets of Nirmala Sitaraman, okay, this is one of her best budget, what she presented in her tenure. So, if I have to rate this budget out of 5, I can give 4 out of 5 to her,
Four
and
out
I
of
can
five.
say
Okay.
this is one of her best budget, what she presented for the government of India.
Right. So 4 out of 5 rating coming from Kranti. Now, finally, I wanted to sort of get your view on the FIs, which have been slightly, you could say a little bit nervous ahead of the main event. We saw, 30,000 kind of outflows, 30,000 crores kind of outflows from the cash segment of the Indian equity markets. And yes, today also we have the policy outcome for US Fed meet. So how do you see the flows sort of panning out for the rest of the year, keeping in view how the Fed will behave and the budget focus from the government?
Shitish, when we have to say FPF flows that are coming to India, right now what's happening is last few years, ETFs have been a very strong powerhouses with respect to the flows of money, channeling the money is concerned. So right now the FPIs, there are some kind of FPIs which are completely long on India, but some kind of these MSCI ETFs are coming. They're bringing the hot money, and what we are witnessing is this hot money is exiting all of a sudden from India. So there are very good amount of FPIs, very good number of FPIs who are on long on India always. They don't disturb their investments here and there because of some small technical changes or some policy changes. But this hot money is disturbing the market and creating the extra volatility in the Indian markets. Right now, if we see in the month of for January itself, we witnessed nearly 36,000 crores of money that has withdrawn from Indian markets, which is a hot money, and it is getting channelized into various other emerging markets. Like if I have to name a few, like Chinese market, the money has been flowing out right now. So by and large, the long only funds are very constructive towards Indian markets, and I'm sure the FI flows getting turned positive on India because still our growth rates are robust. We are at 7% growth rate. We offer a better policy environment and a very good political regime, and also the greatest gift, or I can say greatest strength of India is the youth of India. They have been doing extremely good. That's the reason today budget also emphasis more on the skill development of Indian population is concerned. So these are the key drivers, growth drivers for the Indian markets. So these kind of parameters, FIS don't get in anywhere. If they can look for some kind of value in China right now, but the kind of demographic dividend what we offer in India is something unmatchable in the equity universe across the globe. So and the corporate governances and the management yields and management quality is improving in India. So these are the key drivers that will bring back the FIS money to chase Indian equities going ahead.
Right. Well, on that note, thank you so much for your time, Kranti. And that's all for now. But do stay log on to ET Markets live stream for more investing and trading ideas. Thank you so much
Always
for
a
your time.
pleasure to speak to you, Shitish. Thank you for inviting on your show.
Thank you so much. Sir. Thank you so much.